Hello and welcome to the Jerroms Miller Technical Forum. This is part of the Jerroms Miller Knowledge Hub. This is the first recording we're doing of this podcast, which is a recording and not live. Some of you might have experienced some technical issues, and for which we apologise. Apparently, it sounded like I was on helium, so I'm sure everyone can have a good laugh
An
about that one.
improvement to his normal sound, but there you go. But also, I mean, everyone here was finding that you were cutting out every half a sentence or so,
Yeah.
which obviously isn't helpful. So this is the
Not
better way.
really. So yeah, we'll be releasing this one very shortly, and yeah, hopefully you'll still get all the content and be able to catch up later today. So I'm Nick Wright, Director of Jerroms Miller Specialist Tax, and I'm joined by Pete, also a Director and Head of Corporate Tax with Jerroms Miller. Today we're talking about the spring budget. We did one of these pre-budget predictions chats, whatever you want to call it, back before the autumn statement, and I thought it was quite enjoyable. So hopefully there's some interesting things to come out of Wednesday's budget. But before we did actually start this recording, Pete and I were talking about the things we do day to day, which is corporate tax and working in the owner-managed business sector for the majority of our work, and we're not really sure that there's an awful lot to get too excited about, but maybe we'll be surprised on Wednesday, who knows. So I think the big thing is, are we expecting anything very significant over the weekend? I think Jeremy Hunt made a comment to the BBC about that he will only cut taxes in a responsible way, which suggests maybe some of the cuts that people were expecting might not be so significant. But obviously, with a general election within the next, well, certainly by the end of January, I'm sure that'll be one of the main things on their mind. So,
Do they actually get more than 5 years? Because I know a couple of people have said this, but the last election was the 12th of December 2019. So I would have assumed on a 5-year run-up that they have to do it by December. I'm also
what I
slightly
read was
intrigued by
something
this.
around 24th of January, and I'm not going to
They
profess
have
to
a month
know
or
the
so's
reasons.
leeway. Yeah.
Yeah,
I mean, my thoughts, perhaps being a little bit cynical about this concept of responsible tax cuts. I mean, I accept, I guess, that a lot of people would argue that the Trussonomics approach to stuff was not responsible. But at the end of the day, Jeremy Hunt is under a lot of political pressure to cut taxes. I mean, whether it's going to be enough well, it won't be enough, I'm sure, to save their government, but whether it saves a number of Tory seats, that's just being perhaps skeptical. That feels to me like the only reason for cutting taxes right now. And as you and I were discussing
yeah,
before we got online, you know, arguably, public funds, whether it's through tax cuts, i.e., negative tax in certain areas, or actually putting taxpayers' money somewhere in a way that will stimulate growth of the economy, would perhaps be more responsible than tax cuts that
absolutely.
simply increase the amount of money in people's pockets at the end of each month. Which is not
Yep.
to say I don't appreciate the slight extra I got, but now that I'm paying slightly less in the way of national insurance contributions, and I'm sure you feel the same, but that's
Mhm.
really not the point.
No, and yeah, I did. I have read a few articles that kind of talk about that do take that slant. Which, yes, there might be tax cuts, and we might be seeing the income tax rate cut or the national insurance. But the articles I was looking at were sort of saying how are they going to pay for it? Where's this going to come from? And looking at what changes in taxes we might see. So we'll come on to those.
Yes.
I thought it might be useful to start with EOTs, just because we got very excited about EOTs last time. So let's kind of go through that one, because I haven't seen a single comment about any changes this time around. So EOTs, for those who aren't involved day to day in these types of things, it means employee ownership trust. It's where a business owner can sell a controlling shareholding to a trust, which is held for the benefit of employees. For the seller, it's great because there's no capital gains tax. For the employees, there's some benefits, but perhaps not as great as you might expect. But there's a 3,600 income tax free bonus, and obviously, if there's ever a sale, then they get to share in the proceeds. So the reason we talked quite a lot, I think, on this same talk before the autumn statement was that we had a consultation just finished. I think it was September from memory.
It was indeed, yeah.
So we're about 6 months down the line from when the consultation closed. Do we think there's anything more coming out on EO? I can't say more because nothing has been announced on EOTs yet.
Mm.
But do we expect anything to be discussed on EOTs this time around?
I would be surprised if they don't. I mean, I guess we talked about this back in November, as you said, and I think the comment we made was the consultation is relatively recently finished. But my experience has been that if there is a consultation, then it usually takes 5 or 6 months, and then they
Yeah,
use the next fiscal event to make appropriate announcements. So it seems to me also that the revenue having gone to the effort of consulting on the EOT system, it seems incredibly unlikely that they won't make changes. And of course, some of the changes that they suggested in the consultation document itself are of an anti-avoidance nature. So it's you could almost
yeah,
almost not imagine them not doing something. Sorry, forgive the double negative there. But for example, one of the issues that has concerned some people, although it hasn't been a factor in any of the ones we've worked on, but possibility that if the vendor shareholders are also the majority of the trustees of the employee ownership trust, then effectively they continue to control the company. Now, I personally don't see that as a huge issue because while there's potential for conflict of interest, at the end of the day, they've sold their shares, or usually
yeah.
sold their shares. But I can understand why the revenue is concerned, and I would find it very, very surprising if the revenue didn't go forward with their plans to say that the vendors cannot be the majority of the trustees, cannot control the company afterwards. Although I hope they don't go as far as they kind of hinted at in the consultation document in terms of being really prescriptive about who can be a trustee, because that
Mm.
starts then putting barriers in the way of doing things. If, for example, it says you have to hire a professional trustee who's a member of the Chartered Institute of Trustees, if there is such a thing, I'm
Yeah.
sure there is. You could imagine a scenario where people say, well, that's going to cost 10,000 a year or whatever to pay a professional trustee, and that's a huge cost to put on the system.
Yeah, I think it does make sense because I think we've both had conversations with clients who are really looking for a tax break more than they are actually interested
Mm.
in employee ownership and the business
Perish
model.
the thought.
Uh, so I can see why making sure that vendor shareholders are not controlling, but at the same time, they might actually think that they need to maintain whilst there is kind of the handover period. So
Mm.
I can see there may be commercial circumstances when a short handover period for the management to really come in and be sufficient.
Yeah, but
Who knows?
that's a director level thing rather than
Mm,
a trustee
yeah,
thing. And I
it
think
really is, isn't it?
in a sense it's a little bit analogous to management buyouts, where somebody might go down to, well, might have no shares left, but loan notes or something, or might have some shares and be owed a lot of money,
Yeah,
and they will maintain a place on the board, or there might be reserved matters in the company's articles um, that allow them some degree of, I won't use the word control because that's the wrong word, but some degree of influence to ensure that
yeah,
their investment, if you like, their outstanding debt is dealt with. And in a sense, that is also a job of a trustee, although the trustees are operating on the basis of benefiting the beneficiaries of the trust, because that's how it's
exactly.
meant to
Yeah,
work. Clearly, if the trust has a debt, it has an obligation to the creditor as well.
yeah, yeah.
So, I mean,
Um,
obviously, we don't want to get bogged down into that one
no,
specific point, but coming back to your wider point, so there's a couple of other anti-avoidance issues. The main one, I think, that people were concerned about, or the main other one that people were concerned about, was the being able to use offshore trustees. And again,
Yeah.
it would be surprising if HMRC doesn't deal with that.
Yeah, I think the to me the offshore one is just an easy win. I'm not
Of
sure it's
course
that
it is, yeah.
difficult to change in the legislation. I haven't
Mm.
seen. I'm sure there must be some commercial reasons for doing it, but I haven't seen a trust set up in that way for commercial reasons.
No, well, I
So
think, I mean, obviously, some people will have said, let's use offshore trustees, and then we can sell the company for a huge profit sometime later and
yeah,
not pay any capital gains tax. I think the approach from some of the larger firms who suggest or recommend offshore trustees has been slightly more commercial, or at least, shall we say, commercially stated, that to some
yeah,
extent the potential for a disqualifying event where effectively the tax benefits unwind um, is, often outside the control of either the directors or trustees. So if
yeah,
you have offshore trustees or an offshore trust, then if something untoward happens, like half the team jump ship and you suddenly find you haven't got a valid structure anymore, then that you don't end up with a huge capital gains liability on the trustees for something that happened
yeah,
completely out of their control.
exactly. Because that could put the business under, basically, couldn't it? So
Yes, yes. Um,
yeah, mhm,
I guess what I would also hope for in this context is putting into the statute what is currently, I guess, an unpublished concession by HMRC, whereby, in effect, the amounts paid by a company to the trust to allow the trust to pay off its debt are not treated as dividends. Um, and this has always been, to my mind, a complete fudge, a completely
yeah,
ridiculous situation. I mean, sensible in the sense of otherwise these things couldn't possibly work. But why didn't somebody pick this up sometime, either in 2014
yeah,
when the structure was being set up, when the tax benefit was, sorry, the tax relief was being put in place, or in any of the intervening years? It's almost as though people ignored the corporate tax issues. Um,
mm,
so again, it seems to me incredibly unlikely, since the consultation documents suggested that HMRC was very much in favour of that. It seems
yeah,
highly
yeah,
unlikely that there won't be some announcements there.
absolutely.
Um,
The other
I,
thing I
I,
think would be nice to see was the income tax-free bonuses increasing.
well, yeah, I think this actually comes to the heart of what I feel about EOTs, and there's obviously, on the one hand, the concept that we are very happy helping people sell into an EOT, but I feel that the thing is badly targeted, because the people who make the maximum out of this are the people who sell their company
Yeah,
into an EOT and don't pay any capital gains tax. And the degree to which you can really look at this as any form of genuine employee ownership is very low, in fact, nil,
yeah,
um, because for it to look like employee ownership, then the beneficiaries, the employees, ought to be able to receive, for example, any proceeds, whether it's through profits or gains on sale eventually by the trustees. um, they should receive them in a form that looks like employee ownership. So, for
mm,
example, if the company makes good profits and wants to share those with the employees, at the moment all they can really do is put up their salaries or pay them these tax-free bonuses, which, as you've highlighted, is at a fairly low level. Whereas I think the company ought to be able to pay dividends, perhaps through the trustees, but to the beneficiaries, and then
yeah,
they all get treated as having received a dividend. And I know there's compliance issues. People will say, yes, yes, but
mm,
that all the employees will suddenly have to complete self-assessment forms. But actually, if the trustees pay the income tax, and then
yeah,
the net amount is paid to the employees, who can tick a box on their tax return that says tax paid under EOT legislation or something, that would resolve that issue. The only people who would maybe have to do a self-assessment return would be those who are higher rate taxpayers.
yeah. I mean, for me, the bigger issue in terms of what we call employee ownership is if they receive a share of the proceeds, they should be taxed as capital gains tax.
Yes, absolutely. That
Um,
was the second leg, isn't it? If
yeah,
if the trust actually sells, um,
But so yeah, I think there's clearly some there's some fairly straightforward changes to be made. The offshore trusts, even simplifying the clearance procedures. So for anyone who
Yes, yes.
doesn't work in this, we typically, I think most people typically apply for 3 clearances. Transactions in securities, which again could have we could fairly easily write into the transactions in securities legislation an exemption for sales to an EOT. And one of the other ones, well, there's the loans to participators. Again, that I don't think that's a particularly difficult one that's a non-stat clearance. So yeah, I think the clearance procedures could be straightforward to change. The offshore trust, I think there's very few reasons not to change that.
No, absolutely.
And I mean the income tax free bonus. So it's been 3,600, and it's been almost exactly 10 years since the EOT legislation came out. So over the last 10 years, that should probably be more like 6 or 7,000 with inflation at least. So for me, that's a no-brainer as well. And again, I don't think they're particularly complex matters to change. More looking at things like the CGT on a sale out perhaps is a little bit more in depth, and will they make such a change now? I don't know. But it'd be nice to hear about some EOT changes. Let's put it that way.
Well, if you're at the one hand looking, if we go back to the beginning of our conversation, on the one hand you're looking for tax cuts, and on the other hand you're looking to push forward government policy relating to employees and employee ownership,
Yeah.
then actually making an EOT more attractive is possibly one of the ways of doing that. Now, I would prioritize being able to pay dividends in some way to the employees without them being treated as earnings. And the reason for that, of course, is because the intention is that the government wants to promote long-term employee ownership. So
Exactly,
I could see them saying that dealing with the proceeds on sale by a trust is going to be lower priority. But there's definitely, I think the big message is we think it's time for them to make some kind of announcements. I mean, he may
definitely.
actually simply say on, was it Wednesday,
Yep.
and there are some changes to EOTs to improve the system, and or he may say nothing, and it'll be in the book or the publication.
I'm not sure it's a headline grabber, is it? But
no, I guess unless he makes the thing about employee ownership as a whole.
Very true.
Stimulate the economy by enhancing the benefits of employee ownership. Blah blah blah.
Yeah.
I have today announced some changes that even he doesn't understand, because of course he probably hasn't got a clue what Chancellor ever has had. So
so EOTs, I think so I think predictions, we think hopefully we will hear some things, and there's at least 2 or 3 things in there that should be fairly straightforward to change, and hopefully we will see that. The next thing I thought we could move on to, we talked last time round about stamp duty, and again we didn't see anything, and again there was a consultation. This one was even earlier. This was, in fact, you were involved in this. Was it March, April time? Sometime
June,
around there,
I think.
2023.
June.
Sorry, later June. So June 23,
given the
there was
parliamentary holidays and so on. November was still a bit early.
Yeah.
Yes.
So again, we spoke about this last time. Nothing came out. Do we expect any changes? I mean, again, it's not another headline grabber, I don't think.
Well, again, it depends how you set up your headlines. But I mean, stamp duty can be seen as a complicated tax on transactions that allows or discourages commercial buying and selling of companies, etc. And therefore modernizing and changing it could be seen as a bit of a headline grabber. I mean, after all, it's one of the last taxes that is not self-assessed.
Yep.
It's until the pandemic. I mean, HMRC was basically kind of largely wedded to having to physically stamp documents with these huge, great machines that were resident in Birmingham. And actually there was serious consultation. I mean, not an actual consultation document, but serious questions being put out to us, the tax world, about how difficult it is to replace these actual physical stamping machines. And The concern HMRC had that the premises where they were currently housed, the lease was up and HMRC was moving, and wherever they took them, they were going to have to have the floors reinforced because these machines are so heavy. Strangely, when the pandemic came along, they managed to find a solution to this incredibly complicated and impossible to resolve issue in about 5 minutes. Um, but it's a tax that had largely been unchanged since 1986. And although various things had happened before then, in terms of the physical stamping of documents, 1694, I think, is just
Yeah, it's a very old
ridiculous,
tax,
really.
yeah.
So the fact that, again, they not only went to the effort of a consultation, but also, as you pointed out, there was a year-long kind of series of online meetings between HMRC and interested parties, and I was part of that.
Yeah.
There's an awful lot of work gone into working out how stamp duty can be modernized. So again,
Yeah.
I would be surprised if something isn't said.
Yeah,
I
can I
mean,
can
they
I
managed
just read a
to.
quote as well?
Yeah, of course.
This is for I think this was said to the BBC. IFS Deputy Director Carl Emerson. He said there's lots of problems in our tax system, which we could debate a whole nother time. We need genuine tax reform, and if we want growth-friendly tax cuts, we should be looking at stamp duty on purchases of properties and stamp duty on purchase of shares. They're very damaging taxes, and cutting them would be better for growth than, for example, cutting the main rate of national insurance. So,
Which, in a sense, is what we said a few minutes ago, isn't it? That a tax cut directed at enhancing growth might be better in the medium to long term for people's pockets than
yeah,
simply cutting the amount of tax they pay directly.
yeah. And I know we're talking about stamp duty here, but that quote did also reference SDLT, and it does
Yes.
seem to make sense that the stamp duty is a fairly complex tax. It's only 0.5%, so often is also overlooked by many people.
Yes.
So it's something that I think, yeah, we'll see what happens. Obviously, we've also got stamp duty reserve tax, and I think one of the things on the stamp duty modernisation was whether that's just merged into a single tax. But actually, the quote there even suggests, I mean, you can't really cut stamp duty, can you, if it's only 0.5% already? But
Well, you could. I mean, I guess there's no reason why you shouldn't cut it down from half to a quarter or something percent, but you could also
or
instead
having a
reduce
threshold
its
of some
scope.
description.
Well, and the threshold at the
Yeah,
moment is £1,000 or something. Um,
1,000.
but
Yeah,
but but you could also actually remove certain transactions from its scope, which in a sense is the same as changing the threshold, isn't it?
yeah,
I mean, I think there's a yes. There were, in a way, our involvement with stamp duty is relatively straightforward because we generally deal with transactions involving the shares of private companies. And I think I've said it before,
yes,
and HMRC is aware that most people in our position actually simply operate as though the tax or the duty were stamp duty. And I suspect there are one or two cases where we should probably have paid stamp duty reserve tax instead, and then
yeah,
claim that against the stamp duty eventually payable. But one of the reasons actually for removing the double sort of tax, not that it's double tax, but the two taxes on transactions, there's an awful lot more to stamp duty, as was obvious from the lengthy
yeah,
consultation period and the actual consultation document itself. So there's a lot of other interested parties, but from our perspective, simplifying the rules, making the rules fairer. I mean, one of the things that I've always highlighted and have been talking to the revenue on and off for years about is why is it that they decided certain transactions like schemes of reconstruction and share exchanges should effectively be tax free, and yet they still carry stamp
yeah,
duty, because you say to your clients, yeah, you won't pay capital gains tax, there's no income tax on this, there's no corporation tax. Oh, but it's going to cost you £50,000 in stamp duty because it's a £10 million
yeah,
transaction. So it seems to
yeah,
me that there's a need for change. There's some simple fixes, but what I think the consultation document was really aiming at was a brand new self-assessed tax, much the same as when they brought in stamp duty land tax in 2003, and
Mm,
with a similar timescale. I mean, SDLT, or the removal of property transactions from the old stamp duty charge back, it was, I think, announced only in 2002. So it took them a year, or slightly less than a year, to go from that decision to a completely brand new self-assessed tax that was called
yeah.
stamp duty land tax. Now, just on that very point, that very last point, the name, let's call it something that isn't stamped. You call it instrument transaction tax or something.
Yeah, because
Or
I'm explaining it to clients every single time I have a conversation and I start talking about stamp duty. That most clients are so used to SDLT and assume that I'm talking
yep,
SDLT and
yep.
those are the type of rates they're thinking about, etc. So, yeah, I completely agree. So, $1 million question to wrap up stamp duty: are we going to see anything on Wednesday?
I think it is highly, highly likely, because they've had
Okay.
long enough to think about it and put
Mm,
their plans together. I mean, to
yeah.
some extent, the pressure, and maybe this applies to EOTs as well, they may make the decisions, but then you have the process whereby HMRC people have to instruct Parliamentary Council. Parliamentary Council have to draft up the legislation, and they would probably want to be in a position to make the announcement, whether in writing or actually in his speech, and then have the draft legislation available within a few days, maybe even
Yeah.
on the day, for us to start reviewing, and especially with something like stamp duty that would be a whole new tax.
Yeah.
The
Yeah.
EOTs, it
Yeah.
would be tweaks to existing legislation, and some of it, most of it, would probably be relatively straightforward.
Yeah. Interesting. Yeah. I mean, I've been sort of so focused on what are they going to do for on the kind of vote winning things.
Mm,
And yeah, I'm not convinced how much will happen on EOTs and stamp duty and whether that's going will have been their focus. But so it'll be interesting to see what comes out.
yes. Yeah.
Um, shall we move on? Income tax and national insurance. That is
Yes.
something that I'm pretty sure every article I have read that is talked about what will happen in the budget has mentioned one or both of these taxes. Um,
Well, Nick's has
the
been reduced, of course, already.
Yeah, exactly. So, I mean, it went from 12 to 10% from January this year. So it's interesting that people are suggesting that there might even be a further 2% cut in national insurance.
Mm,
And it seems that most people are suggesting now that national insurance is the thing that will be changed rather than income tax.
okay.
Um, whether or not income tax, I mean, they've reduced income tax as well, didn't they, from the higher rate band? No, the additional rate band being 150,000. That's now ties in with the 60% band where the personal allowance is tapered away. So that's 125 something or other, 125, 140,
Whatever.
something like that. Yeah. So
Doesn't
they've kind
concern
of
me.
so that yeah they've played around with the bands, brought a few more higher rate people into additional rate,
Mm,
so you can see why the cutting national insurance kind of affects the either lower paid, shall we say, or the basic
mm.
rate taxpayers will benefit more. So you can see why maybe this is more of a vote winner. Um,
Yes, and I can certainly see that. And I guess, again, it's back to that balance between maybe spending the money on benefiting the wider economy, or putting money directly into people's pockets.
yeah. And I can
So,
see there should be a balance. I mean, cost of living, and all the rest of it.
mm,
So, especially for basic rate taxpayers, I think that would be, you know, every little helps, as they say. So,
yeah,
I can see that being something that is announced. I actually, again, going back to some of the research I was doing before this, there was comments kind of that we need to, if we are going to cut taxes, we need to actually show how we can afford them, which it comes
yes,
back to the debacle when we had, what was it, 4 prime ministers over about a week last year. So,
yes.
um, and I
If they were
think,
the prime ministers, the rest must have been absolutely bloody awful. Yeah. Ugh.
so yeah, I mean, we'll see. I think the idea that this needs to be affordable, and we'll come on to a couple of other taxes that might be affected, which effectively might pay for some sort of income or national insurance cut. But I saw a headline: 1% cut equals 4.5 billion per year.
Is that
in
income tax or
taxes.
Nick's?
That was Nick's.
Wow. Okay.
Um,
Yes.
so yeah, it's quite costly, just a 1% cut. So we'll see. I mean, the other thing in terms of sort of income, if you like, is the high income child benefit charge, and there's been quite a lot of talk about that. Again, that's
Yeah.
something that hasn't changed. It's like EOTs. It came out this came out in 2013. The threshold where you start to lose or you either repay the child benefit, but the threshold starts at 50,000 and has done for the
Yes.
last 11 years now.
Yes. This is an interesting one, because also when they brought in the charge, they deliberately said they were going to make it simple, and that was deliberately at the expense of fairness. So you've
Yeah,
got this idiotic situation where if both parents are earning £49,999, there's no clawback.
yeah,
But if one of them's earning nothing and the other is earning £50,001, then there is a clawback between 50 and 60,000 till you get to nothing. But the other issue is the compliance issue. Um, because we constantly read cases in taxation of people who have successfully argued against a penalty on the basis that they don't live with the mother, or usually the mother
yeah,
of the children. They had no idea about the high income benefit charge, because they're simply not they're not the recipients of the child benefit. And when it came in 2013, they were earning flumpence halfpenny, and now they've become a little bit more successful, and they don't speak
yeah,
to the ex-wife or mother of the children, and blah blah blah. So the courts or tribunals have found time and time again, not every time, but time and time again, that ignorance actually is an excuse in this case. So I think if we're going to do anything at all with this, I agree that they should put up the rate. Sorry, the threshold.
the
But I
threshold.
think
Yeah,
the threshold should be looked at in the context of the actual income available, not just one person's income regardless of the others.
yeah.
And there needs to be,
I mean,
and the
this
government
this
should
affects
have
me
the,
very much personally. So
yeah, but also, I mean, but you're not
yeah, so
separated, so
I think the fairness point.
but
No,
no,
but I'm
absolutely,
thinking, if your
no, I
first
agree.
example.
Yes, but if we
Mm,
also point out or highlight the fact that the government has lots of sources of information. I mean, my last tax return, for example,
yes.
was largely pre-populated. Apparently, obviously, I didn't do it myself. Um, but if you have a child benefit charge that says, okay, here's how the clawback should be allocated or dealt with, but you actually have a
Yeah.
system where the government knows who the parties are, then they could turn around and say, this is now the charge. In effect, it becomes a pre-population part of the tax return or something.
Mm,
So we could deal with the
yeah.
fairness. You could deal with the pre-population thing. The knowledge
Yeah,
thing.
I think some sort of averaging would be,
Yeah.
you can elect to average your income between the two
Mm.
individuals, for instance,
But
would
also, I
make
mean,
it a
if
lot
you're
fairer.
a couple who are no longer a couple and have been divorced for years, for the sake of argument, um,
Yeah.
then one person starts making extra money, but that doesn't get reflected in the amount that they pay to the ex-partner who's looking after the child. So again, how should
Mm,
that affect the high income child benefit charge? So there's all sorts of questions one could ask there. Um,
yeah.
Having said which, it might be worth asking those questions, because when it came in 2013, I was actually quite shocked at the numbers that were stated to be saved in terms of payments from compared to the previous system that had no means testing whatsoever. I mean, it was a
Yeah.
significant number of billions of pounds, and it would be even more now. So,
Mm,
we'll wait and see. But obviously, in a sense, in terms of what we get up to, not usually much of an issue. Um,
no. I know the ATT actually made a representation about high income child benefit charge as well. So
yes.
um, and I'm sure they're not the only ones to do so. So, yeah, I wouldn't be surprised if we see something. But to kind of, I guess, wrap up the income tax side of things, my feeling is I wouldn't be surprised if we see a cut. I don't think it'll be 2%. I think it'll probably be more like 1%. And
Nix or income
I
tax?
also think high. Ooh, good question. I think Nick's again.
Okay.
And I think there will be a change to high income child benefit charge as well.
Okay.
We'll
Fair
see.
enough. Fair enough. So,
Um,
capital gains tax.
yeah. Do you think we're going to see much?
I would be surprised if a Tory chancellor who is without question in extremis, as it were, in a political context, were to turn around and remove what little remaining benefit there is
Yeah.
from business asset disposal relief, the £100,000 benefit that people can obtain
Yeah.
from people who generally small business owners, are seen as being typically right of centre Tory type supporters. Now, I may be completely wrong on the demographic here, in the sense that it may be that the last 14 years have left a lot of those people thinking slightly more left of centre, and so it would
Yeah.
make no odds. But it just seems an odd move, given that business owners are usually seen as slightly right of centre, to tweak that further. I suppose there would be an argument for potentially increasing it slightly, but I think he's likely to leave well alone in
I
terms
think
of
so
that
too. Yeah.
relief. Now, the other question is whether he tweaks the rates of capital gains tax more generally.
Yeah. I think that's far more likely if there's going to be a change.
And if you then say, I mean, you can do two different things, it seems to me. One is you could increase the main rate of capital gains tax, and whether
Yeah.
you take it from the existing 20 to, say, 25 or 30 or something, or whether you take it to something substantially higher, like equivalent to income tax rates on the gains, which obviously was the case for a number of years, probably before you can remember, but I certainly can. I mean, the question then becomes: do you do what they've got now, that the business asset disposal relief is then half the main rate, or do you leave business asset disposal rate at 10%? Which in a way means that the people who make windfall gains on, their shares in public companies or whatever pay more tax, which again might not play obviously into the Tory party's natural constituency, but might be seen as a fairer thing to do. But business owners still get the tax break for selling their business. And of course, the other side of it is, if you put capital gains tax up, does it mean that people are more reluctant to sell their businesses?
I was going to say, does this mean actually we'll see even more work coming in on EOT, or at least even more queries coming in on EOTs and those types of
Unless
things? Because
they decide to limit that relief, of course, because at the moment, unlike business asset disposal relief, you get EOT relief on your full proceeds.
so
And
it's
obviously, we
unlimited.
weren't going to make representations saying that's unfair, you should limit it to 10 million quid each or something. But I'm sure there are people within HMRC who've had those thoughts themselves. So,
I mean, one
that's an
thing that
interesting
has
question.
surprised me is that I was surprised that we've now got an annual exemption of 3,000, because I think the amount of people who are now going to have to declare, and the cost of, from HMRC's perspective, the additional admin burden for them of having to deal with that is surely going to be quite significant. Why not, instead of cutting the annual exemption, increase the rate slightly? Seems more logical
Yes,
to me.
I think the thing is that, in a way, cutting an exemption doesn't look like raising taxes.
No,
It's
that's the
a
problem.
perception thing. And
Yeah.
I mean, you're right, it will leave a lot more people having to pay capital gains tax, most of whom probably won't even know.
Yeah.
I mean, it'd be interesting to know how many actual transactions generate gains that now fall within that sort of £3,000 to £12,500 range that's now come into capital gains tax, and how many people are even aware? And of course, for the majority of people, they're selling the house
Yep.
that they live in, so there's no gains. Maybe they're selling a rental property, in which case they're probably sophisticated enough to know that they do need to pay capital gains tax, and it's unlikely to be only a
And the
£12,000
gains are probably
gain.
big
So,
enough.
they would never have been
Yep.
exempt or within the annual exempt amount. And a lot of other gains might fall within the chattels exemption. So, I mean, in a way, the average man on the street, or woman on the street, forgive me, interesting question as to what gains are likely to arise that are caught in that sort of
You'd have thought it's mainly
£9,000
share
gap.
portfolios, wouldn't you?
Yeah, I guess, but
Yeah.
the average person
Okay.
on the street, how many of them have got more, anything more
No.
than the original 50 quid's worth of British gas shares from 1980, whatever it was?
Yeah.
So
Yep.
some interesting thoughts, but I mean, also the other point that came out of the Office of Tax Simplification, remember them, and their review of capital gains, which I was also involved with, is that the amount of money raised by CGT is relatively low.
Yeah. Because it was the OTS who did they recommend, or they at least said something in their report about aligning CGT rates with income tax rates, didn't they?
There was some talk about that. There certainly wasn't any
Yeah.
talk about reducing the annual exempt amount, because I mean, to some
Yeah.
extent, the whole point is that for relatively trivial amounts of extra money, there's a huge amount of HMRC resource needed to staff up the people who review tax returns of people who've
Exactly.
made a £3,500 capital gain in the year. So
Yeah. Okay, so
um,
are we that excited about CGT for Wednesday?
well, I would be quite excited if something happens. I think my query is whether something is likely to happen. And
Something will. Yeah. Agreed.
I mean, if anything, I would expect him to put, or not expect, if he were to do anything at all, maybe notionally putting up the main rate, say from 20 to 25% or something.
Yeah. Well, I mean, it was when was it? 28 and 18. It was a while ago now, but at one point we only had 28 and 18%, didn't we? For
Well,
CGT.
some of us can remember a lot further back than that, Nick. When
Not
you had
me,
to
not me.
multiply the gain by 3/7 or something, and then divide by the square root of -1, and take off the age of your
I
district
remember seeing
inspector.
that in an old textbook somewhere. Yeah.
Yeah, written on parchment. Yes.
Yeah,
Anyway,
absolutely.
talking of very old things,
Um,
inheritance tax.
let's talk IHT. I mean, there has been quite a lot of talk. I just struggle to really get on board with the certain people saying with a complete scrapping of IHT. That just seems. I know IHT doesn't actually bring in, again, like CGT. I think I was looking around for sort of what the IHT take was in 2021. It was just under 6 billion, which as a proportion of total taxes, it's very low. I think it's
And
obviously
equivalent to a
increased now, but
1.5% decrease in income tax.
yeah,
I mean, I think the issue again with IHT is the incidence on people who historically would never have dreamed they'd be eligible to pay it. And if you say,
yeah,
look, I mean, I can't remember what the numbers are. I probably never actually knew, but let's suppose 0.5% of estates used to pay inheritance tax back in the day that the
yeah,
nil rate band was set at £325,000. If that figure is now 5% of estates, because it has been 20 odd years, if not longer, since the nil rate band went up. I have no idea.
been
It's
a
not my
long
field,
time.
but
Yeah,
yeah.
yeah,
So if we reset the nil rate band to go back to 0.5% of estates or 1% of estates, whatever, it just seems to me the average middle class person who happens to live in Hertfordshire, so the value of the family home is quite high compared to Leicestershire, for example. They shouldn't be paying inheritance
yeah.
tax. So it's not really a
No,
field we work in, but I think
no,
to some extent, it's not about the nil rate band, it's about the proportion of estates that have to think about it.
Absolutely. And I think the fact is now, even let's say an estate that has the main home and maybe they've got and maybe they've got one rental flat or something, or they've got a holiday home down by the coast. Most of those are probably now falling in. Bearing in mind, with a spouse, we've got £1 million total.
Yeah.
If your home's worth a decent amount, I mean, even my parents, they they didn't live in like a nice fancy house. It was a fairly mediocre house, but their house is sort of must be 600-700 grand now
Yeah.
because
Yeah.
of where it is rather than the house itself. But
Yes. I mean,
and so
my
add
parents
a
have been.
holiday home on and you're
Yeah,
nice and done.
exactly. My parents have been, successfully skiing, spending the kids' inheritance tax for 30 years since they retired. So I don't think there's going to be much cash left. but as you say, their flat in North London is worth north of 700 grand because I know what they paid for it.
Mm.
Because they only moved
Yeah,
about
yeah,
5 years
exactly.
ago. But no, you're absolutely right. I mean, I could see abolition being an answer, but I could also see putting the nil rate band up to an appropriate level would be a better answer, and might
Yeah,
actually again play to natural Tory voters, which you have to bear in mind is going to
yeah,
be a
exactly.
factor.
And
But it's
what
also
one
going to
of
put an
the other
awful lot of our
things
colleagues out of work.
exactly. But one of
Um,
the other ATT representations was to merge the nil rate band and the residence nil rate band, which to me makes sense. I think
yeah,
I'm not
yeah,
really sure I ever really understood the point of
no.
175,000
Well,
residents
it's
nil rate
because
band.
most of the representations about the nil rate band being too low focused on the fact that property values, particularly in the south of the country or
Yeah,
southeast of the country, had risen so quickly. Um, I
yeah.
mean, we've also talked about agricultural property relief and business property relief, or is it now just called business relief? Um, but the
Well, I think it was always called business relief, but
yeah,
everybody calls it business
oh, I
property
see.
relief. I don't think no
Okay.
legislation ever called it business
Shows how
property
much
relief.
I know about IHT. I mean, I think they were both introduced to avoid what ended up happening a lot of the time was, say a parent dies, leaves the farm to the children in equal proportions,
Hmm.
but the only way to actually fund the inheritance tax charge was to sell all or most of the farmland.
Yeah.
Or similarly with a business being left to the next generation. And essentially, the idea was to prevent the need for fragmentation of businesses, including farms and
Yeah.
so on. And I think those pressures are going to be there. I mean, otherwise you end up in the
Exactly.
situation which, I mean, I don't know if you know much about French vineyards, um, but you
No.
start off, 200, 300 years ago with a huge vineyard covering most of a hillside, for example, and 6 or 7 generations later, the sort of great grandchildren each own about 3 vines because of the
Mm.
way that the French inheritance
Because I've
rules.
had
I'm
the
not
tax
saying
through
it's
the years.
explicitly a
Yeah.
tax issue, but we those, I think the policy needs of those two reliefs remain in place. I mean, they are complicated in some areas, and there's occasional tax cases, for example, about whether something qualifies for BPR or business relief. Um,
Yeah.
but I don't actually see either of them as complicated or unfair enough um, to need any
Mm.
change. And again, it would be
No.
counterintuitive if you're trying to win votes.
Yeah, I agree with your point on the APR things. You are going to have to sell things off, and even for business relief, I think one of the big things when this was being talked about over the autumn statement was, well, what's that going to do to things like the AIM market, which has an awful lot of investment purely for people who are putting money in to protect themselves from inheritance tax.
And
So
there is
it's I
perhaps
think there's
some
a number
kind
of
of an
factors here.
argument, yeah, that those sorts of structures could be looked at. But the question is how much is actually
Mm.
um, being lost in tax here. But I guess when we look at
Yeah,
business property relief, you're quite right. It's an interesting question. If I sell you a vehicle, which is basically I will invest your money into 5 different trading companies on the alternative investment market, and you have no involvement because you don't need to, but they're trading companies for IHT
yeah,
purposes. I mean, one answer to that might be simply to um, apply business property relief, for example, only to shareholdings of more than, say, 10 or 25 or something percent of an AIM listed company. Because remember, you don't have
Yeah.
to list all the shares. So if I
Yeah.
want to raise funds, I might
No.
retain 51% and spin 49% out onto the AIM. So you don't want to do a blanket refusal to recognize the exchange or anything like that.
No. No. Okay, well, we're
Okay.
just a couple of more little things to mention before we wrap up. I think the first is furnished holiday lets. I've seen some talk about whether they'll actually attack furnished holiday lets in order to pay for the cuts. So, furnished holiday lets in a lot of cases are treated as a trade. So things like capital allowances are available, and so if they cut the rates of NICs or income tax, then no longer being eligible for capital allowances on FHLs might be somewhere to pay for it. Interestingly, I don't know if you know this, but FHLs are not treated as a trade for EOT purposes, which I came across a few weeks ago.
Yeah.
One of the few areas that I've come across that FHLs don't qualify as a trade, but
I did not know that. So I was today years
although
old when I discovered that fact.
there you go. And then I thought that's interesting. That might be something to shout about. And then I thought, how many FHL businesses actually will be selling into an EAT? So
Well, how
so
many
maybe it's
E's
just
will
a
they
little bit
have?
irrelevant.
Yes, but no, it's a fair
Yeah,
point.
exactly.
Um,
Anyway, so yeah, I think
Again, though,
it
is it
would
their
be a big
natural
change with property planning.
is it their natural constituency that they would be attacking
Mm,
if they, some of these possibly less popular measures are the sorts of things that one might see an incoming, probably Labour government doing.
mm,
Because if they're alienating anybody, they're not their natural voters necessarily, but B, of course, because at the beginning of a 5-year parliament, you can do some unpopular stuff, because if the economy starts to build and people are better off at the end
yeah.
of the 5 years, that's what they'll remember. So,
Yeah.
um,
Yeah, an interesting one. I haven't seen too much talk about this, but it would certainly be one way of paying
yes,
for any of the cuts. But as you say, is a Conservative government at the end of the
no,
potentially end of
exactly.
their term going to change that? Um, and then the other thing that I have seen a bit more talk about is the remittance basis
Yeah,
um, and whether they completely scrap it, which would be interesting. Again, neither of us really neither of us deal with this at all, really.
no.
But um, yeah,
I
I
mean, to
mean,
some
it's
extent, the question there has always been to me about how the remittance basis or a lack of it would tie in with double tax treaties.
yes,
Because of course there would also, let's say I am a foreigner who comes here and starts earning money, let's say on a 5-year secondment by the people who employ me. If the UK also wanted to tax the income from my renting my house out in Nevada or wherever that I come from,
yeah,
then there would be something, I would hope, in the double tax treaty that makes sure I didn't pay both US and UK
exactly.
tax on the same income. So, to a large extent, people on secondment, the question is, how will they be impacted if you did get rid of the remittance basis?
Mm,
It's a
it's
big
interesting,
question mark.
and yeah, I think one of the interesting things when I was reading various points about the potential scrapping of the remittance basis, actually, this is one of Labour's key plans. So it's almost um, you know getting in there before Labour can take the credit for it, kind of thing. So that would be it'd be an interesting turn from a political standpoint if they decide to kind of hijack it, if you like. But
Yes,
again, we shall see. We shall see.
yes.
Um, I think that's probably most of the kind of things that I can think of that would be kind of
Mm.
the main areas. One thing actually, VAT.
Yeah, it's an
Um,
interesting one, that,
will they
because,
increase the threshold?
well, in
It's
a way, the logic is actually to reduce it down to about £5,000. um, but because pretty much every other European country, as far as I understand it, has a very low threshold for VAT.
mm,
And so, you know, if you have your threshold set at a place where nobody is ever going to be able to live on less than that,
yeah,
so essentially everybody charges VAT, then you don't have this cutoff at some level where you've suddenly got to decide whether to put up your prices by 20% or take a
mm,
20% personal income hit, essentially, in order to continue trading. And I've even known accountants say to me, can you bill this next month, please? Or can you, because of the way we work, could you engage directly with the client and bill them? Because
Yeah.
if you bill me £20,000 for this piece of work, I'm going over the VAT threshold. So, but I think
Exactly.
the answer, the right answer at the moment is simply to just let it wither. So actually,
Yeah.
I wouldn't change it. I would leave it where it
No.
is and push things, so that in 20 years' time, we're looking at that limit, whatever it is, 82 or something. I've no idea.
85, I think it is now. Yeah.
85. But I mean, I would be saying, if we get to a point in 10, 12, 15 years' time where it's equivalent to about 40 grand in today's money, and then a few years after that, it's only worth 20 grand, it'll be like the old
Yeah.
higher paid employee thing, which, even in 1988, when I joined the Inland Revenue, that figure was £8,500 a year, I think.
Yeah.
And
I think that's right. Yeah.
Even then, you didn't think of yourself at 8,500 as being a higher paid employee.
Yeah.
So,
Yes. So I think to wrap it up then, EOTs, we think we might see something, and we
yeah,
both, I think, hope we'll see something.
stamp duty ditto.
Stamp duty ditto, yeah. Income tax, I think we are looking at a curtain probably to nix. And I'd
Okay,
like to see something on the high income child benefit charge.
okie doke. Capital gains probably staying the same. Inheritance tax
Yeah.
probably staying the same. Be interesting to see what he says about non-doms, because it's an awfully
Yeah.
complicated system to suddenly make an announcement and expect to have fully worked up legislation
I
within
think
3 weeks.
that's the big thing. I think it'd be interesting, as I say, to see if it's essentially a hijacking of a Labour policy. But
Yeah.
I think
But even they
it's quite
recognise there's a
significant
value
change.
to a system that doesn't penalise well-paid people coming here on a secondment or
Exactly.
whatever, because it's
Exactly.
not about the Russian oligarchs who are buying up most of
No.
Mayfair or whatever.
No.
It's actually about the reasonably senior banking person from Nevada, my example, who comes to do a 5-year secondment at the London branch or something.
Yeah. Absolutely. Well, I think that kind of covers everything we spoke about. So all that remains me to do is thank everybody for joining us on this episode, and
And
hopefully you found it
apologies for the
interesting.
fact that
And
it's recorded rather than
it's
live
recorded,
because
yeah.
of the technology.
But yes, obviously, any questions, any comments, please feel free to post on LinkedIn, or even drop us an email.
Yep.
And it was always great to hear everyone's thoughts. So thanks for joining us, and hopefully we'll see you again soon.
Yes. Thank you again. Bye.
Thank you.